Good day, folks. This is the other Otto presenting to you today the Stochastic RSI time and frequency statistics indicator. And to start off with, let's do a little disclaimer. Anything I say or indicate here is not financial advice. It's purely for entertainment and educational purposes. But I do hope that this indicator brings you as much insight as it has me. And let's jump into it. So firstly, to find the indicator on TradingView, I'm going to go to indicators and type in Stochastic RSI, and it'll pop up Stochastic RSI time statistics by the other Otto. Now I've already got it up on screen here, and let's maybe just reflect on what the Stochastic RSI tells us in the first place. It's a momentum tracker that typically shows the direction of momentum in the market and also indicates when an asset is either overbought up here in the upper regions, extreme regions, typically above 80 percentile, as well as when an asset is oversold, typically below 20 percentile down here. Now, as you can see, the oscillator moves between these ranges, and I came to wondering, what are the characteristics of this oscillator, and how does it behave? So what are its behavioral characteristics? And I wanted to know this over both a time and frequency basis. And so I've now taken a snapshot of the actual indicator statistics over here and just presenting it up here on screen just for easier viewing. Now, I've kept the statistics pop-up box quite small so that, one, you can view it on a phone screen, but also if you have numerous indicators stacked on top of each other, you can actually still have space for volatility, things like that up above. But let's get into the stats themselves. So if we take a look at what the features are, we measure what's the average long, and that average long is measured from the last long signal down here until the time that it prints its first sell signal. So it would be from this point over here up to that last sell signal. Now, if we take a look just at this little measure over here, we can see that it took 18 bars from the time that it printed this last long signal until the time that it printed its last short signal, or the next consecutive short signal. And on average, it takes 10 bars, plus minus 4.5 here. So we can see that this actually took significantly longer than the average and one standard deviation that is presented after the plus minus over here. And so you can see that this occasion actually lasted quite a lot longer than what would be expected as an average. Similarly, for the average short, you can measure those out and you can expect how long it would take from the time that it prints its last sell signal till time. Unfortunately, one doesn't know when that last moment is, but it does give you an idea. Once it actually leaves this critical zone, very likely that it's going to continue up to the upside. But of course, as you can see, there are occasions when there are numerous crossovers within this neutral zone in the center here. Also presented in these statistics is the sample size. And so in this case, on a weekly time frame on the Bitcoin index, you can see there have been 21 occasions where there's been a long from the oversold region up to the overbought area. Of course, as you change time frames, your or frequency or the sample size increases. So on daily time frame, we've got 123 samples. And the next thing that we look at is what is the average time in either that overbought or oversold region. So that would be measuring from the point where the oscillator actually enters, the K line actually enters the overbought area or oversold area until it actually departs that. So in this event, it was 20 bars. Now on average, in the overbought area is 6 bars. So this is a significant period, much longer than the average plus a standard deviation, probably falls within the second standard deviation. But here you can see how long you can actually expect that oscillator to stay in that critical zone. So if we had to take it from the last entry point, which we had over here on the mid-October, and we had to measure out what the average time in the oversold region is. It's 7, let's call it 8 bars. We could expect the oscillator to actually depart this on the current period. So in this scenario, of course, that's unlikely. You've got to use some thought in analyzing this data, but you can see here that that's very unlikely at the moment, as it just freshly crossed up again, and it's only the first sell signal up in the critical zone. And for one short, it only occurs 38% of the time. And that now brings us to the next bunch of statistics over here, which is the frequency at which one long, two longs, three longs, etc., all the way up to 6, and then summarized after 6 occasions, similarly for shorts. And what we can see here is that it's 38%, so there's still a 62% chance that the oscillator stays up here. It's very likely, since it just crossed up again, to come and print a second short. But the moment that it prints a second short, that then covers 80% of all the occasions. So there's only a 20% probability remaining that the oscillator remains up here without crossing back down to the opposite oversold area and printing the next long signal. So this really is an indicator that doesn't give it to you on a silver platter. There's a lot of data here that you need to interpret, and it's very nuanced. But it really does give you insight into the behavior and what the probabilities are of the oscillator staying in a critical area, of it actually changing over, how long it's going to be in that area, or how long a trend is going to last on average. So if we come back to, this 8-week period or 8-bar period, we're on a weekly basis here, plus minus, let's look at the overbought area, 6 bars, 7 bars, plus 4.5, let's give it 13 bars. We could expect that on average and within this first standard deviation for this oscillator to leave this overbought region somewhere in the mid of Jan. Now, of course, many people are calling for some sort of correction around that period anyway, so that would make sense. So if we add that all up and we go, okay, it's printed a short, there's still good probability that it prints another. It just printed a long signal over here, so it's definitely going to come in for a second short. In regards to timing, we've still got a fair amount of time left, and so it all starts adding up. So for myself, my thinking would be, well, okay, if it's coming in for a second short signal, there's only 20% chance that it's going to remain up here. It's probably looking to occur somewhere mid to end Jan. Once it actually reaches that second short, it would be a good time for me to look at taking some profits off the table, waiting for a correction, and so forth, and then reanalyzing from there. But yeah, so those are some of the statistics that are presented in this indicator. And we can also see here that another feature is the pivot price. So the current pivot price on the weekly time frame for Bitcoin, currently trading up at $107,000 plus, is at $107,159. So if this weekly time frame had to close below that price, we could expect this oscillator, the K and D lines, to cross down again and start making its way down, so shifting momentum back towards the downside. Okay, so let's just go into some of the settings features of this indicator. We here have the typical RSI inputs, and you can of course change your source as is typical. But here is the thresholds for where your long and short signals actually fire off. So if you want to see the oscillator actually turning down and accounting for downtrends in a more severe critical area, so let's call it 10 percentile. For long signals, let's call it 90 percentile. For short or cell signals, you'll see that that actually changes the statistics in the text box. And suddenly one short goes from 18 or from 42%, sorry, 38% previously, down to 18%. So of course it's changed our sample size. There are now only 12 samples, but you can see that that actually changes your statistics and your probabilities, but it presents the data down here. I personally, for most assays, prefer just keeping the typical 80 percentile and 20 percentile. But as you range across different assets, you'll see that they have different thresholds, and it's good to play around with this and see where you actually want to start looking for buy and sell regions. So just going to change that back again. Okay, then when we go to the style settings, you've got all your typical color and symbol arrangements that you can change. You can change the visuals of your bands, so your maximum minimum thresholds, without changing the statistics. So I can have my statistics presenting here for 20 and 80 percentile, but just for visual effects, could then change this to 90 percentile, just to see it in a different light. It also has these min and max values that are presented. So these min and max values are the RSI calculations during this time period from which the stochastic RSI is actually calculated. So that makes quite an interesting analysis, and I will go into that in another video. So those are there if you want to take a look at that. And then of course your typical visibility features. Okay, I think I've covered most of the aspects of this indicator. Let's maybe just go through a few time frames just for relevance. So to start up on a monthly time frame, let's get rid of that image and let's actually analyze what it has to say. Okay, so on average, a long lasts 8 bars. So let's take a look at that. So from the last long to the next short is typically 8 bars plus minus 2, or 8.5 plus minus 2. So we're here on 7 bars. So it was a pretty typical run to the upside. Of course, it doesn't mean it ends there. As you can see here, the oscillator stays in this critical zone up at the top here. It's actually come in and printed a second short, which gives it a 66.6% probability of continuing down to the downside, or let's rather say a 33.3% probability of it coming and printing another short signal in the overbought region. You can see here that the momentum is very clearly turned up again. The pivot price is $96,500, so the current month would have to close below $96,500 for the momentum to come down again and for a short signal to fire. If it had to happen within this region, it obviously wouldn't happen in the critical zone, but that gives you a pretty clear indication that we are heading towards a critical period on the monthly time frame. And when there's another sell signal up here, perhaps some consideration needs to be given to your strategy. Now, there's not a lot of data here. There are only 4 samples, so not much to say on that. On a weekly time frame that we started on, you can see here that the first sell signal has printed 38% chance that it continues down from here, but as it did just print another buy signal up here, we can expect the second, but that then only leaves 19% chance of a third sell signal actually printing here. So we can also, of course, take a look at your durations and try and determine some expected time period at which point the oscillator would then depart from the critical zone and start making its way back down to the bottom. Okay, if we go here to the daily, let's just get rid of that. See here, same features, but of course the sample size is a lot bigger, 123 occurrences of a long from bottom to top on average from the last long to the next short signal is, let's call it 12 bars. It says 11.5 here. Let's go for 12. So it's getting to that region, plus minus the first standard deviation, which is 5.5. So let's add 5 onto that, which would then bring us to 16 bars. So very likely that the next short signal will be printed somewhere in this region. You can obviously see that, but nice just to have that backed up by some data. And then if we take a look at the number of shorts, so it's only 30% of the time that a single short prints. So there's 90% chance that it stays up here in this critical zone and prints numerous longs. You can see here is an example of printing more than 6 shorts consecutively before making its way down to the oversold region, but that only accounts for 1.6% of the time. So very likely after you get to 4 shorts, that the oscillator is going to start turning down, momentum is going to start shifting, and price will probably start correcting or coming down. Okay, and then let's just, for last example, go here to the daily time frame. Let's get rid of this drawing here. And we can see that, yeah, the last buy signal lasted until the next short, lasted 5 bars. That's a lot shorter than normal. On average, it's 11 bars. Was only one short signal that printed here before it started making its way down, but we can see it's flip-flopping around here in the neutral zone. Yeah, so very difficult to tell which way it's going to go from here. Pivot price at the moment is $107,353. So we're already below that pivot price. So if this hourly time frame had to close below that in 45 minutes time, you could expect the oscillator to continue downwards or momentum to shift towards the downside, probably in for a short-term correction over here. Okay, well, I hope that that was explained well enough. If there are any questions, post it in comments. And yes, I think the other thing that I need to say is the indicator is accessible via my Patreon link under subscription. I will be putting it there as a one-time sale option as well in the near future. If people just want to get the indicator to use it. If you do subscribe, it also comes with the stochastic oscillator time and frequency statistics, giving you the same data presented, but just for the normal oscillator or the stochastic. And I look forward to getting some feedback. I will be keeping on working on this indicator as time goes by, refining it, adding features, removing features, depending on what the community have to say. But yeah, trade well, and may the momentum stay with you, whichever direction you're trading. All the best to you. Cheers.